Yes, good morning, Steve. The cash flow can fluctuate, across the quarters, but we're effectively well positioned. When it comes to the quarter, we were expecting this quarter to be pretty much in line with the previous one that you have just commented about. And that's the case. We've seen again softness in the consumer and construction markets. And we expected also a bigger and a stronger rebound on the Chinese market, which didn't happen. So that's the reason why we're a bit more cautious, on the bottom line. But on the free cash flow, as you have said it, we have not only confirmed the guidance that we given originally, but we have also said that we expect now to be reaching the higher end of the range that we have given. And this is linked to the fact that the macro environment in the supply chain have evolved positively, and that we have done a lot of efforts also on our working cap. But from a growth perspective, there are potential to grow on the market and to bring innovation to the market, and that's what we have to focus on.
Yeah, you can focus on what you can control. You can't focus on what the broader Chinese economy is doing. That is clear from all the CEOs I'm speaking about. But you said in your first quarter, and I'll just quote this, and I want to just get a compare and contrast from you now. The rest of 2023 is seen challenging, but the second half has the potential to improve. Do we need to downgrade our estimates for the second half now, Eric?
Well, we have been cautious on the profit line, but we think we're going to deliver on the other elements of the P&L, because there's still uncertainty when it comes to the end markets. The world has not solved some of the major structural problems that have been starting, in the past years. What we've also said is that our H2 compare in 2022 is a bit more favorable. So that's the reason why we think that H2 will be more favorable for us in 2023. Now, you've seen our gross margin, we've increased by 220 basis points versus last year. So we've been able now to extract cost from the cost of goods sold, which was very difficult to do in the past 3 years when it was more a supplier market. So, the different part of the P&L are getting in line, but at different times. And this is why we expect H2 to be stronger than H1.